two things that happen after Valentine's Day. Right around Valentine's Day, you give your Valentine's Day gift to your spouse, you enjoy the day, and then shortly after that, I start looking at oil and energy. Oil and energy, be my Valentine, because there's an oil and energy pattern it sets up. This is not a day trading pattern. This isn't a weekly pattern. This isn't a 30-day pattern. This is a multi-month pattern that we look at every year at this time, and now it's time to look at it. The energy cycle looks like this. Statistically, oil and energy is usually weaker between July and February of a one-year cycle, and is typically stronger between February and July. It's actually mid-February to mid-July is the actual peak times. So we're at mid-February right now. We're in the area where it could be a strong cycle. Now, you could be looking at me with two heads and saying, Tom, the Trump administration wants to drill, baby, drill. Yes, they do. And we've been hearing this news for quite some time. But is it a possibility that that a lot of this news has already been digested in the oil markets? Is it a possibility that for the next few months, demand could take over supply and possibly move the oil markets higher? I believe so. And as a rules-based trader, I have to follow the rules. And the rules are that this is a time-based calendar trade where we buy, we get bullish in mid-February, and then we look to get bearish out between then and mid-July. Typically, the pattern runs about 10 to 15%. Maybe we look at, if we were looking at the overall market in oil, we could look at that 10% level, right? Looking at it today. So if we look at the price of oil, maybe USO, that's an area we could look at to see, what might end up happening during that time frame. And so if I were to take a look at, what does this affect most of all? I think it affects three things. I think it affects the price of oil, or we could even look at USO. It could also affect the energy markets, and we could look at XLE. That's the oil and energy ETF. And then, of course, we could also look at a stock, at a stock that closely moves with the price of oil and energy. So what I want to do is I want to take a look at a little bit of both. So let me slide this over here, and then Ryan, if you could pop that open here for me, please. This is a chart of USO. And, if you go back and you look, this is July. All right, this is the high that we saw last July. In fact, this actually had a pretty nice move here. If I were to kind of bump this in a bit, you can see here's February, right? Last year, 70, and then we ran up to around 82.50. So this was a 15% move right here, during the time of about February to April, and then you had another little pop there before we move lower. Now, let's blow this out and let's see where we are and what's kind of happened since then. Well, September, we saw lows in oil. We started to see this consolidation before the jump. And again, you see the jump that happened. The initial jump was right after Election Day. And then when Trump took office, we saw a move higher in oil. And that took us from the mid-70s to about the mid-80s. But now we've kind of cooled back down again as we sit into $76 a barrel. And so, again, USO highly tracks with the price of oil itself. I believe that at the very least, if we were looking at a 10% run up, what's 10% of 76? That's $7.60. That puts us around the mid-80s, call it 84, 85. And that's not much higher than we are right now. So if I was kind of slide this over, this could be the area where we'd see that potential move higher. Now, that's a little bit of a longer trek to the upside. So that's one area we could look at. ETFs like USO. I'm going to take you a little bit farther in with this particular pattern. So let's talk a little bit about this pattern and what you can do with it. So, looking at the price of oil, we could buy the ETF. All right, we could buy USO if we really wanted to, and or an energy ETF like XLE, or we could look at a stock and we could hold that till mid-July. That cost of ownership obviously is going to be buying the stock. I would rather look at that 5-month pattern. I would rather rent the stock, right? This is where, if you take a look at real estate market right now, I understand and I don't know this, but other than what I'm hearing is it's better to be a renter now than a buyer. If you look at real estate prices, especially in the DC area, they're going down. They're not going up right now. So maybe better to be a renter. I want to be a renter in this pattern as well, and I want to be able to rent this for a cost of $500 or less, which is much lower cost, much lower risk, and you stand to have a higher return on investment than buying and holding for the stock for that 5-month time frame. All right, so let's talk about a stock that I think is going to have a good jump in this particular area, and it's Nextra Energy, NEE. So NE is a great way to take advantage of the increase in the price of oil and energy markets. That's one really good place we could look at too. It highly correlates with oil and gas, and it doesn't have that kind of downward risk like an ETF of US oil does, because companies like, or especially USO and UNG, that's the US oil company ETF, and United States natural gas. They have something called contango spread, because what these two companies have to do is go out and constantly replace, when they're buying oil and they're buying gas, they're buying futures contracts. And futures contracts have this built-in time premium that just erodes over time. So as they buy these short-term futures contracts, it does push negatively on these ETFs. Right? Nextra is a company. It doesn't have contango. So there's a risk that we can take out right away. So looking at the money calendar, as I do, when you look at the money calendar for this oil pattern, it's in the 70s when you go out to July. But I wanted to look at something that goes out at least the first couple months to get things started. This is Nextra Energy. So going back into 2015 all the way to 2024, the last 10 years, 9 of those last 10 years between now and around mid-April, I believe, we've seen this stock rise in pattern. Only time it didn't do it, COVID. And so as you move forward, take a look at what we see here. This is the NEE money calendar bull, 90% historical probability moving higher between now and April 30th, right? And that's on top of the February, July overall bullish move in oil. So we see a target on Nextra at around 80, right? So that puts us somewhere just above that 10%. I think we call that around 11, maybe 12% higher move. So right in the sweet spot that we see that happening. Last year had a really good move. See that that green spot that I'm circling right now? This was mid-February. This is mid-July. But we're just looking at what's going to happen between now and April for Nextra Energy. So you got the information there. Take a look at it and you decide, all right, what am I going to do? Again, you could buy the stock if it hits 68. Right? If it were to hit, you could buy a stock now at 68. If it were to hit 80 by July, it's a little bit less than a 15% ROI. The July 70 call option. So again, I'm taking it a little bit farther. If you're going to rent, you got to look at what's the price target look like? So we see a price target of, if history repeats itself, around 80. So I'm looking at 70 call options, which are just slightly out of the money. If the stock were to hit 80 by expiration, you're talking about those calls being worth a value of 10. They were $3.75 on Friday. That makes sense, right? Does it make sense to you? That's the question you have to ask yourself. So tell me what you think about NEE as a bullish pattern in a calendar year where now we're going into, and with going out of the bullish oil pattern that we see between now and mid-July. These options look pretty good. Now, there's not always I look at these options and see where I can find a call option that more than doubles in value if we just hit that minimum target. And then the last question you want to ask yourself is, well, if you get 150% target, if we get to 80, what about call spreads? So spot the opportunity. That's the oil and energy pattern for the year of 2025. And again, the next thing I'm looking at is, do I have the ability to create a potential move with options? All right, that is planning that alternative risk trade. And finally, we just plan, exit, and manage the trade through our broker. By the way, before I take we finish this section here. I have a more detailed version of this, which I will be presenting tomorrow night. And if you look below, I have a link for you. So look below for the link. If you want to join me tomorrow night, that is Wednesday, February 19th. I believe 8 p.m. we're going to be doing that. And I'm going to have a more detailed version of looking at this. I've got a PDF that we'll be sharing with everybody too, a multi-page report on the oil and energy markets for 2025. So be sure to join me to get that information, and I'll be going into much more detail and, of course, more trade opportunities as well with Oil and Energy 2025.